No Trade. This is Don Kaufman. September 21st, 2022. It's a Fed day, people. And I got to tell you, absolute chaos inside of the tape here with just about 20 minutes left to play inside of the trading day. All I can see at this point is just, I guess, what I would call fear and loathing in the Fed. So I'll just get right down to it. The S&Ps were a little bit higher prior to the FOMC announcement. FOMC announcement comes out as expected, 75 basis point hike, yada, yada, yada. No one cares. But I do have to tell you, I listened to the Jerome Powell conference, and man, it was aggressive statements being made. But I actually want to take you into some of the trade action, and then we're going to get into, much more importantly, I think what we can anticipate kind of moving forward. Some of the price action, though, is just downright vicious at this point in time. So here we are to kind of break down some of the price action. Right here, that's the 75 basis point hike. Okay, Jerome Powell starts speaking right here. Huge rally. We just missed the 39.31, which is something I've been just talking about incessantly. We missed it, okay, by less than 6 handles in the S&Ps. From there, we just came off hard and fast. And that's why I kind of called it a little bit of fear and loathing inside of the Fed. But there's some really kind of unique features. And as I said, the Fed, really the market didn't slide until the Fed was done speaking. The comments out of the Fed were, I just would have to call them downright hostile again towards the marketplace, revolving around the fact that, restrictive policy, yada, 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 nobody cares. But the bottom line is that restrictive policy is causing the S&Ps to slip. It is not conducive, if you will, to a rally inside of the marketplace. But the reason that, this evening's video, that I'm kind of entitling it, Fear and Loathing with the Fed, let me show you some downright specifics, okay? You want some fear? Go look at the dollar. The dollar, if that doesn't scare you, nothing should. Broke out to the upside. I mean, this is something, again, I've been talking about incessantly. The dollar has kind of become the new, VIX. We exploded to the upside. Now, granted, things kind of cooled off a little bit. We rallied back up. There's no great feel. We're out, basically out in never land here. Okay, if you haven't looked at the euro is down in the 98-cent handle. And again, you got to start opening up, maximum capacity of charts, looking all the way back. And this is no joke here, looking all the way back into the 2001, 2002 kind of time frame to see price action. But it's the magnitude of the move. And again, this happens to be a monthly chart. It's the magnitude of the move that has me concerned inside of dollar and or euro. But the dollar has gone into never land to the upside, which does not bode well, okay, for markets moving forward. And that's, one of the key takeaways here is it's not to look at the S&Ps and go, they're down. Everybody can see they're down. That's not going to help you at all. It's to look, okay, at the S&Ps and to kind of rationalize, all right, some of the confirmation, if you will, of risk that's piling into this marketplace. And that's precisely what I'm going to do over here, because the picture that I'm going to paint moving forward, okay, I'm going to say this without unequivocation. We got some ugliness on the screen right now. And again, I started with the dollar, which again exploded to the upside. All right, enough said on that front. Moving on, go to the bond market. The bond market has people confused. Why are you confused? The sell side activity is becoming so extreme, all right, that traders are willing to buy something that no one has wanted to touch, okay, in months. They're buying bonds. They're selling S&Ps and they're turning around to buy bonds. So the sell side in the S&Ps didn't kick in until later, but the bonds, the bonds ripped. They just ripped. They're coming off a little bit though right now. And again, the only way that I can kind of look at the bonds right now is just simply to say, all right, because you're buying bonds. Think about this. You want to buy that? I'm not being facetious in any way, shape, or form, okay? The bonds haven't seen an uptick in, since basically August. There has not been an uptick over here. This is the first uptick that we've actually seen inside of the bonds, and they're buying them because, you know what? What else are you going to buy? What are you going to do? Buy some dollar? as it's broken out to the upside, like, oh, the dollar's kind of a full trade. I mean, that's a crowded trade. No one has even thought of buying bonds, well, in a very long time. Now they're buying bonds. It looks like a defensive play. I don't like it. I don't have to like it. I don't want to like it. If the bonds back off in the next couple of days, we are in serious trouble for the S&P futures, meaning that, breaching lows 3,600 has to be on your mind inside of the S&Ps if they start buying the bond market. Continuing on, by the way, speaking of the bond market, back to the dollar here. It's one of the reasons I kind of recorded this with like 15 minutes to go. The dollar started to rip again in the last couple of minutes, right? There is momentum, if you will, to the downside. And it is the only way to describe it. This is hostility inside of trade. You want to see hostility? Look at the contract size. We're raging, people. 8,000 contracts per minute on average, bursts up to 10 and 12,000 contracts. And this is all after Jerome Powell has spoken. The man has left the building. Continuing on. So we went dollar. We did the bonds. Okay, here's the big one. You ready for it? The volatility futures flipped. So the volatility futures, people look at this in their autonomy, and that's just, it ain't worth its weight, okay? It's just not worth looking at. You gotta look at the volatility futures for what they are. There is now, okay, volatility in backwardation. That is, ACH is now exceeding, okay, NOV. ACH is actually pricing 27.85. NOV, okay, is roughly 27. We'll call it 70. So there's about a 15 cents inversion. Again, it's moving literally right now. We're starting to invert, which actually completely changes the nature of trade. When I say it changes the nature of trade, any derivatives firm actually caught short ACH, long NOV, which is a very common trade. The moment the volatility futures start to invert, what do? They sell S&Ps to actually mitigate exposure. Now, don't be surprised, okay, if volatility futures kind of mellow out and we close it, for instance, 28 even here and 28 even here, that they, uninvert and go back into a mild contango. You got to watch this almost day to day, all right? That is one of the most significant changes, because what the volatility inversion, what backwardation implies, okay, is once again, now there's real fear and loathing inside of this marketplace, all right? So we turned around and we started buying, okay, the bond market, started buying none other than the dollar, okay? If you look at VIX, you're like, whatever, Don, the VIX isn't really moving, okay? By the way, there was a little bit of a misprint possibly inside of VIX in here. Nevertheless, the VIX isn't really moving up that much. Yeah, but this is right when volatility, okay, can explode. And in fact, happened to be like kind of the weekend update talked expressly about that, like get ready for that, that ultimate surge, if you will, inside of volatility. Okay, done with the dollar, done with bonds, talking a little about volatility futures. Well, last but definitely not least, okay, got to talk about the SPX. And at this point, this is where everybody's like, why don't you talk about my stocks? You don't have to talk about stocks. Okay, the advanced decline line is pegged. We're in full-blown correlation. Oh, there's 10 stocks up. Okay, save me, Walmart. Nvidia is actually up. I mean, the concern right now, like if you really want to think about stocks, the concern right now, stuff like Apple. Got to watch Apple every single day. Be on Apple Watch. Why? Apple, okay, unequivocally is holding the markets higher. You realize that Apple actually cracked the upper edge of its expected move this week. Now, again, I wasn't going to give anything, okay, to you in stocks, but this is one that's really bothered me. I would anticipate if this week is going to get downright ugly, and today it's not necessarily downright ugly. I mean, listen, SPOOs are down 60 handles. And we're going to talk about the week at large momentarily. But if we're going to get really ugly, okay, on the week, anticipate Apple to actually really break out, if you will, to the downside, okay? I think that's the only way to really phrase it. Apple's only down 15% year-to-date basis versus a NASDAQ that's actually down almost 30% and an S&P that's actually down a cool 20%. Apple is actually holding us up. Okay. Now you compare that to something like Tesla. And again, this is where I go, well, Tesla's still down like 24%, but look around. Okay, look at stuff like Amazon, down 30%. Meta, do I even need to bring this up? Down almost 60%. Google, okay, down 30%. Where are you going to run to? Where are you going to hide? Okay, Microsoft, down almost 30%. It's all about Apple. It's all about Apple. If we're going to continue to kind of break apart in the marketplace, Apple is going to be the leader in the pack. to the downside. I would also anticipate that the financials will be on the forefront of sell-side activity. I've explained that extensively. Financials actually hitting the lower edge of the expected move. This move has been violent, specifically today. Okay, that's what I call some sell-side. 10 minutes left to play in the period. All right, as I was trying to wrap up a moment ago, let's go to the SPX, the mother of all products. Inside of the SPX, I started with the idea like, oh, this is getting hideous to the downside. But then to put the entire week into some perspective, okay, here we are, it's Wednesday. And if you look at the expected move, and again, I want to script this for you guys really quick. In fact, to do so, bear with me as I kind of zoom into the expected move for the week. All right, we started the week in and around that 38.75, and I just want to clarify, right around 38.75. Okay, so that is here. That's what that central line happens to be. The lower edge of the expected move. Lower edge of the expected move. Look, it's just north, okay, of 37.50. Where are we right now? All right, so give or take, we're about halfway home, okay, to the lower edge of the expected move. So even though the move that you're presently seeing in markets, it is downright some violence inside a trade. There's no question about that, okay? The point of me taking you into the SPX is to give you a feel for like, I don't care what the bounce is right now or that we have 8 to 9 minutes left in the trading session, all right? The feel is this is a fairly precipitous drop. We could bounce from here. Nevertheless, okay, you got to be really just aware of where that risk happens to lie to the downside. And again, to peg the lower edge of the expected move inside of the SPX would not be much of a reach. Okay. Furthermore, if you take a look at the option chain itself inside of the SPX, and you go out to the Friday expiration, you realize that we're still actually looking at another $84 of movement. So the aspect to kind of leave you with this week is, okay, there's no great levels that I have under, okay, the 39.31. In fact, I'm going to cruise over once again to that 30-day 1 hour. I'm going to look at that. That is, and as I said, that is magnificent in terms of a move. Okay, we were flat, we rallied, we sold off hard. I don't have any great levels down here, but what I can tell you is where we presently are is an absolute trapdoor that's open right now. It's open because, well, volatility says it is. It's open because the dollar says it is. It's open because they're now buying bonds in response to sell side activity. Again, buying bonds. As I said, no one has wanted to touch bonds, okay, in months, except there's that much fear being generated, obviously, by the Fed. This move is not to be taken lightly, okay, but you have to have a lot of respect for the point that we're still at a 28 VIX, okay? And if you're looking for the VIX to break to the upside, well, at that point in time, you're going to need to see something really, really scary happen to the markets. Lots to think about, of course, following this Fed announcement. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.